Let's get into this. The US dollar has been trending downward in the last few weeks, and a weaker dollar actually might just be a good thing for consumers here. Here to weigh in, we've got Catalyst co-anchor Madison Mills. Hey, Maddie.
Hey, Brad. So listen, I'm going to break down the pros and the cons here. It's a little bit complicated, but just stick with me and we'll get through it together, right? So the impact of a weaker dollar, it can kind of be a mixed bag for consumers. Let's start at the thing that I think matters most to our audience, which is the impact that a weaker dollar could have on inflation. That's the raising of prices for everyday goods. So the weak dollar can lead to higher prices on imports from abroad. We know so much of the products that we're buying every day are not made in the U.S. If you do have a weaker dollar, that can lead to higher prices on those goods that are imported. That can be more expensive and lead to more inflation. More inflation, not good. Obviously, that's going to be the key thing to watch as you head into Jackson Hole tomorrow, by the way. But again, weaker dollar potentially fueling inflation for those imported goods. If your dollar is not going as far abroad for companies, it's also not going to go as far abroad for individual consumers who are looking to travel, right? Get your international travel in now before we see the dollar coming down even more on anticipated Fed rate cuts, because your dollar can go further abroad if it is a stronger currency than the place you've been going to. That's why so many people have been talking about traveling to Japan over the past couple of years, because the yen has been so much weaker compared to the dollar. And that's also, by the way, what leads me to my last point here, which is if you do want to become an investor that's looking into trading currencies, getting into global investment opportunities, this could be a good opportunity for you if you utilize the weaker dollar to get into assets abroad. Think foreign stocks, foreign bonds, even foreign currencies. You can use that weaker dollar, trade into something a little bit more expensive. And when you sell out and convert that back to the dollar, you're going to be making even more money. That's exactly what happened with that unwind of the carry trade that happened a few weeks ago and led to the market rout in the U.S. So many institutional investors were doing the exact trade that I just mentioned with the dollar yen that it led to a little bit of a sell-off in markets when the Bank of Japan did raise interest rates. So it's going to be really critical for you to watch what central banks globally are doing if that's an investment opportunity that you want to get into with a weaker dollar. Of course, not giving financial advice on that, but it is an opportunity for investors. So again, just to summarize here, the totality of information on a weaker dollar, yes, it can raise costs for consumers when it comes to individual goods. And yes, it can make traveling abroad a little bit more expensive. But from an investor perspective, it does present a potential opportunity for unrealized gains if you are looking at investments abroad, Brad.
All right, I got to go back on my trip planning website to make sure that I can book that vacation.
Go to Japan now. Let's go.
Now, all right, show's done, everyone.